Market tension is shifting from inflation fears to a sharp divide in corporate execution. The January inflation report provided the primary spark for today's market action. Consumer prices rose 2.4% compared to last year, which came in below the expected 2.5%. According to Nana Schwalmegu, the market reacted by pricing in an 80% probability of a rate cut by June. This shift in the interest rate outlook triggered a rotation into small caps. The IWM index significantly outperformed the broader market, as lower rates typically ease the burden for smaller companies. However, core inflation remains at 2.5%, which is still above the Federal Reserve's long-term target of 2%. This creates a backdrop where the path of interest rates is clearer, but the Fed still has work to do. In the technology sector, the focus is squarely on the durability of the AI infrastructure cycle. Applied Materials reported a 70% jump in profits, driven largely by intense demand for AI computing components. Management expects high bandwidth memory and DRAM to remain the primary growth engines through 2026. This reinforces the view that hardware spending is not yet slowing down. On the technical side, Alpha Trends points out that semiconductors remain the market leaders. However, there is a clear warning that a failure below near-term support levels could lead to a deeper pullback. If the sector drops below 400, it might target the 395 or even the 376 level. This suggests that while fundamentals are strong, technical discipline is becoming more important for managing semiconductor exposure. The divide in the tech market is becoming clearer through recent earnings reports. Pinterest shares saw a sharp decline after issuing a guidance miss that triggered fears of AI disintermediation. According to Bella Liao's Hygiene, investors are concerned that visual discovery platforms may lose value as search behavior shifts toward AI assistance. This contrasts with Airbnb, which reported strong growth and suggested that proprietary data ecosystems can resist AI disruption. The interpretation here is that platforms acting as simple intermediaries face valuation compression, while those with unique data moats are being rewarded. This anxiety gap is forcing a reevaluation of which software companies actually own their audience, and which are merely pass-throughs that could be replaced by new technology. Looking ahead to next week, the defensive retail setup is a major focal point. Walmart is scheduled to report earnings on February 19th, with analysts looking for 11% profit growth. Investors Business Daily notes that while Walmart has performed well, it is currently in a profit-taking zone. This suggests some investors may trim positions before the report. Favor of importers could provide a margin boost for companies like Walmart and Costco. The Treasury has indicated it has the funds to return previous tariff payments if the court invalidates them. This creates a high-stakes environment where legal outcomes may matter as much as quarterly results. Several other signals are moving through the market today. Quanta Services is expected to benefit from increased energy demand as hyperscalers build more data centers. In the crypto space, Coinbase reported a quarterly loss, but shares gained ground after the company announced a $2 billion stock buyback. Rivian experienced a 26% short squeeze despite giving weak guidance, proving that positioning can often trump fundamentals in the short term. We are also watching for the Berkshire Hathaway 13F filing due on Tuesday. While these disclosures are delayed snapshots of previous holdings, they remain a major catalyst for retail investors who follow Buffett's moves. To summarize the current setup, the disinflation trend is creating a clear tailwind for small caps and interest rate-sensitive stocks. The market is increasingly rewarding companies with infrastructure moats, while punishing those vulnerable to AI disruption. For the upcoming week, we have 3 items on the watch list. First, monitor the semiconductor index for any break below the 400 level, which could signal a broader pullback. Second, watch Guardant Health, as its report on Thursday carries the potential for 15 to 20% volatility. Finally, observe the price action in major retailers ahead of Friday's tariff ruling. Next week will be defined by the intersection of Walmart's earnings and the Supreme Court's decision on trade policy. These events will provide a clearer picture of both consumer health and corporate margin stability for the rest of the quarter. For full source details and claim transcripts, please refer to the links in the description.